Hello, everybody. It's so great to see you all here this afternoon. I hope everybody's week is off to a really great start. My name is Laura Bolio, and I'm the VP of Marketing here at Holisticplan. If this is your first time joining us, welcome. We are super thrilled to have you here. If you've been to our webinars before, welcome back. It's great to see you again. So as always, our number one goal is to deliver the absolute maximum value to you and bring your practice to the next level. So today we have an incredibly special guest, which I'm super happy about, Emily Rassam. She's going to be talking about maximizing impact, mastering the art of demonstrating tax planning value to your clients. You might remember her as our breakout star from the tax planning summit we hosted in April. There was so much overwhelming demand for Emily that we had to bring her back. We brought her back a couple weeks ago, and we're bringing her back again. We're going to turn this into a series, which we are absolutely thrilled about. So Emily is an Investopedia Top 100 advisor, and she is a partner and senior financial planner at Archer Investment Management. Before we jump into it, yes, this webinar will be recorded, and we will email out the recording within the next day or so. Please feel free to pop any comments or questions into the Q&A. We'll do our best to answer them as we go, and anything that we don't get to, we will send an answer in the recap email. So with that, Emily, I'd love to hand it over to you.
Yeah, thanks, Laura. So excited to be back. Really enjoyed joining some of these webinars, and part of it is because I am not a CPA or an EA, and I am not somebody who does marketing for a tech company that offers these different tools. I'm a financial planner. I work with clients all day, every day. I rarely do things like this, and I've actually only ever said yes to Holisticplan to come on and do these types of presentations, because I think that Holisticplan, it really elevated my game. So I've been a planner for 17, almost 18 years. And the first part of my career, I was scared about tax planning. It was a go talk to your CPA type of conversation. And really in the last few years, with tools like Holisticplan and other financial planning tools that we have, that has given me so much more confidence and has really allowed me to become more of a superhero and an all-in resource for my clients. So I don't have this big tax background. I've got a background in working with clients just like you all probably do on a daily basis, and providing more and more and more support for them on really big, important matters like tax planning. And I've realized what a huge value tax planning is to the clients that we provide. Let me tell you a quick story first before I jump into my presentation. So I met with a client last Wednesday, and they are 78 and 75 years old, and they're brand new to me. Their advisor retired. They were looking for a new financial planner. And they came to me and we did their whole onboarding, and I went to do their tax meeting, which I'm going to talk about. And in their tax meeting, I found out that they have never, ever had anyone help them with tax planning before. And they're in their late 70s. I'm like, oh man, there have been so many possible opportunities, because they're right now paying IRMA. So they're paying more for their Medicare because they have a higher income, because they didn't do tax planning along the way. They're also very generous. They give to different charities. They don't have a donor advised fund, and they've never gifted highly appreciated stock to these different charities. So they've never kind of deployed these little strategies like topping up their tax brackets or doing Roth conversions or donating stock instead of cash. They've just been giving, and they give like $45,000 a year. They've been giving that, and they've got this big appreciated taxable account. So I had this moment at the end of our meeting thinking they really needed this help all the way along, and they would have a significantly different tax scenario now in their late 70s if they'd had even just this incremental amount of tax planning along the way to just identify where are they in the brackets, what are their opportunities for deduction bunching or maybe giving differently, QCDs or giving through donor advised fund or giving appreciated stock. So all of these different types of opportunities that we help our clients with provide this huge amount of value. And kind of seeing this client that didn't have this all the way along the way, I'm doing my best now, but there's not as much as I can do as I could have if I'd met them 20 years ago. So there's so much value that we all talk to so many different clients and can maybe advise them and educate them on their taxes along the way. So I want to show you a little bit about how do I tee this up? So how do I talk about tax planning to clients that are potentially coming in the door? And how do I differentiate myself when I talk about that? So a lot of different firms can say they maybe provide some tax planning or tax analysis, but how do I talk about that? That might sound a little bit differently to a prospective client so that they realize that we do more and we provide this huge value. So how do I demonstrate that value to them in the initial conversations with them? How do I then continue to demonstrate that value to existing clients all the way along the way during the relationship? And then how do I actually kind of provide that support for them? So, what are some tools and resources that I use that made me kind of go from scared about tax planning to now feeling like this is something that we need to provide every single client every single year? So, I'll take you through a little bit of that journey. Laura mentioned that we had a presentation back in July that was talking about how do I efficiently handle this? So how do I use our CRM system and tasks and workflows and processes and checklists, all of that to make this scalable? So if you're thinking, okay, this is a great value, I want to provide this to my clients, but how do I kind of structure my firm to do that? There's some kind of process ideas that you can go back in the recording from my last presentation to talk about how we just handle that internally and how we share the responsibilities across our team. And we give away in the email that followed up the different checklists and tools and things that we offered as well. So if you need that, we're happy to send that over to you. So without further ado, I'm going to jump into some slides here and show a little bit and demonstrate to you how I demonstrate to others how we provide tax planning. Okay, a little bit about me. So as I mentioned, I'm lucky I joined this kind of career right out of college. I've been a financial planner for 18 years. I work for a firm now, small RIA based in Austin, Texas, but we're 100% virtual. So all of our clients engage with us virtually. We have 180 million assets under management with about 200 households. And our structure, myself and another advisor, so there's 2 lead advisors, and then we have a support team of people who help us with planning, trading, and just setting up all of those processes and workflows too. So one thing I talked about in the previous presentation as well is what are the things that you can do if you're the lead planner and client facing? What are the things your team can do to support and tee all of that up? So can they go in and create a tax report for you, or plug in the data into a scenario analysis, or stage a tax letter for you, so that by the time kind of you step in, if you're in that kind of capacity in that lead role, that you then have all of the data where you need it in clean, beautiful reports. So I'm going to show you also which ones I use in my practice and how we provide that value to our clients. Okay, so we're going to start with before they meet you. So I'm going to go into how do I market and talk about some of the tax planning. We're going to talk about the language that we use and the goals that we communicate. I'm going to show you some of the reports that I mentioned that we go into, some of the goals that we talk about with clients. And then I used to have a little Post-it note on my computer screen that said, show your work. So even for clients that maybe don't have an opportunity this year. So let's say you have 2 clients who are mid-career, W-2 wages, not much you can really do. Being able to kind of show them or tell them what you're potentially thinking about related to their plan, or things that you're maybe considering regarding their tax plan over a long period of time. So tax planning is a long game. And one thing I mentioned later is it's a game of inches. Sometimes you're just shaving off a few corners of their tax bill kind of each year and creating some strategies that provide a huge amount of lifetime value. So that's another thing that I talked about in the previous presentation, is really how do you then maybe kind of quantify that over a long period of time. So I use financial planning tools like Right Capital to kind of show the kind of long range and high level planning. And then I use tools like Holistiplan to be able to look at kind of the year by year analysis. So reviewing the prior year, looking at a scenario for the current year, and then staging a tax letter for CPAs. So those are things we'll go into as well. Okay, before they ever meet you, potentially being able to share on your website, social media, your newsletter, your podcast that you do, jot form, data collection, all of that. It's continuing to put that in front of them and sharing that you provide tax planning advice. So right at the very top of our website, we have our kind of top things that we help our clients with: setting goals, lowering your taxes. We've got you covered from all angles, including tax minimization strategies. And it's the number one thing that we list under important financial decisions we can help with. So those are things that we put right on our website. Many people do. So it's just one way to kind of show them immediately that that's something that we provide for our clients. But really, some of the more customized magic comes from social media. I'm very active on LinkedIn, and a lot of what works for me are client stories about tax planning. So potentially saving clients money on taxes in their lifetime, or reminding people just kind of simple tax tips. So maybe it's close to the end of the year and there might be some strategies before December 31st, or we're getting close to filing. Have you made your contributions? What are some of the things that you might have done? And so that's one of my ongoing themes. If I don't have something else I'm writing about purposely on Tuesdays, typically I'll put in there a tax tip or tax story. I give myself some writing prompts along those lines. So I do get clients engaging with me related to tax planning, and sharing some of those stories about how we've used tax planning to help clients save taxes now or in the long run. We take our social media content and we repurpose it into a newsletter for clients. So that's one way that we use some of our social proof that comes in on social media. We package that up into every 2 weeks. We send out an email to our prospective client list as well as our current clients. And some of them are different client stories. We change a few details, but we'll talk about things like saving money on taxes, or things that we might have done to potentially create some of that magic. I also talk about on podcasts. So if clients are potentially going to find me, when we talk about kind of the comprehensive services that we provide, again, client stories go really well in a podcast kind of setting as well. So as you are completing meetings or as you're providing value to clients, potentially saving a content bank of ideas of what you've done. So I can pull a story potentially to help me explain to another client how we can use tax planning to help, or how we can explain or market to clients before they potentially meet us through each of those different forms. When we are potentially collecting data from them ahead of the first meeting, one of the things that we want to know is what's important to them. And so the second option on the list of kind of what we're gathering, what they're interested in learning about, or what they need help with, we say lowering my taxes. And I took a look this morning, and the new clients that have come in the door this year, 75% of them selected lowering my taxes as one of their concerns that they already know about. The other 25% just don't know yet, don't know what's available to them, and don't know how much value we're going to be bringing them potentially through some tax planning. Okay, so once we get them on the hook, so they're doing an introductory meeting or a discovery call, what are some of the things that we potentially do to differentiate ourselves? So I love the Brendan Fraser kind of approach of ask a lot of questions, but be intentional about what you're asking and why. So some of the types of questions I'll ask clients now, about their current experiences with advisors, or their current experiences maybe handling their own taxes or financial planning or investments. I want to know kind of how is their current advisor helping them with tax planning, and then close your mouth. So let them talk, and explain to you what kind of support they're currently getting. Most people, when I ask that type of question, aren't getting much support. Also, if you ask that same question about what their CPA is doing, as you all likely know, most CPAs are really providing tax preparation, but not tax planning. I feel that there's so few people who are getting the level of planning that we have the ability to provide. So that's why I come on these webinars, is to show you that this isn't that scary. It's something that we can provide, and everybody needs it. There's such a big need here. And hopefully we can all get to these people before they're 75 and 78 years old. So I asked them, how do they make decisions now? So that's kind of a common question that I like to ask in introductory meetings is, how do you make all of these different decisions that you have to make along your life right now? So how do you decide when to exercise options or sell vested stock? We happen to work with a lot of clients in the tech industry who have equity compensation. So that's something that we kind of ask them about now because that can be a little bit of a pain point. Have you ever had a surprise on April 15th? So that's one of the goals that we communicate is helping somebody understand now where they are. I had a meeting yesterday with a couple who we ran through a scenario analysis for them to help them understand what their tax bill is going to be in April. Because last year, before they started working with me, they ended up owing $20,000 and they didn't know that they were going to. So that's one thing that was a big pain point for them and why they wanted to seek out working with a financial planner is because they had this big surprise. Nobody likes to have to write a $20,000 check unexpectedly. So we did that scenario for them. We ran it for them and saw that they would potentially owe another $8,700 on April 15th. And they were pretty happy to know that in August. So that's something where they were able to make some adjustments to their withholdings out of their paycheck throughout the remainder of the year to help maybe alleviate that pain a little bit. So that's something that I like to ask about. Um, are they currently holding a tax planning meeting in the fall? Very few people have ever done that before or had an advisor or a CPA do that for them. How are they currently giving? So if it sounds like maybe they're charitably inclined, is that something that they're doing right now through a donor advised fund? Or if they're over 70 and a half, are they doing QCDs? So those are some things we ask them about. Are they topping up their tax brackets along the way? So especially if they're in maybe kind of early retirement time frame or in that little happy valley where taxes sometimes come down a little bit, are they maybe strategically thinking about topping up these tax brackets? So before the TCJA sunset or before they reach Medicare age. So are they potentially thinking ahead or looking forward about their total liability of their taxes over their lifetime? Have they calculated? So for a lot of people who are mid-career, have they ever evaluated whether they should contribute a Roth contributions or pre-tax? So there's the math of that, but there's also potentially just their preferences. So for some clients, they might want to, even if it doesn't totally make sense, they might want to make Roth contributions. Not everybody is slowed down to educate people on what the differences are and what they might want to potentially do. So by asking them some of those questions, they're already going to understand how you educate them, how you help them think about this differently, and how you help them think strategically about their total taxes. Depending on their age and situation, have they considered Roth conversions? Have they ever looked at bunching their deductions? So are these things that they've done before? So I also find by asking those questions, I have banks of questions. I love questions. So typically I will kind of look at a lot of different types of questions I can potentially ask. And that's a way to kind of, one, demonstrate that that's something we do, but also put it into a way where I'm not just telling them, hey, I do this, we do this, we do this, we do this. It's more asking them and asking them and allowing them to talk. That's a really good way to both demonstrate what we do, demonstrate the value of it, but also to kind of show them, hey, this is kind of why you need me. This is why you need a financial planner to help you think through this and be a thought partner for you as you make these tax decisions and financial planning decisions throughout your life. There's some other things that we preview. So I do like to show them some samples of what we do. So what is a tax plan? It's interesting that most people don't know what a financial plan is in general and what a tax plan is in general. So one of the things I like to do in an introductory or discovery call is to potentially just show them, this is what a financial plan is. This is what it does. And here's a demo or a sample of that. And once you start to work with me, this is what you're going to get. So in a lot of buying decisions that we make in other areas of your life, you want to know, I give you this, what do I get? So if I give you money, will you give me a beer or a financial plan? What is that financial plan you're giving me? So I like to show them, hey, here's some samples of what we do and how we work. And I like to weave in some client stories too. So I like to potentially Google stalk them ahead of time and figure out maybe how old they are, where they work, those types of considerations, so that I can weave in stories that sound like them. And I can pull up demos that might kind of sound and look like them too. So I have different financial plan demos and tax planning demos based on maybe some ages or professions. So when I show you one of my holistic plan demos in a moment, I have two professors in their 50s. So if it's a 30-year-old tech professional, maybe professors in their 50s don't maybe sync up quite as well. So I have a young tech professional, and I have professors that are in their 50s and about to retire, and I have somebody deeper into retirement. Those are some different personas that I can potentially weave in stories about that might be similar, but also to show those things as well. So I've got a couple questions I'm going to pause for a moment here and answer. So one of the questions is, can you comment on your meeting cadence with clients for all review items and the times during the year for each meeting? So that's actually a resource that that can also be sent out. Holistic Plan has a guide for this about maybe when to provide different types of reports and tax planning. But for us, what we do is when we onboard a client and we build their initial financial plan, we have a financial plan onboarding process. And in that process, we used to include tax planning as part of the financial plan delivery. And then we realized, hey, there's way too much here. It needs its own meeting with estate planning. So the second iteration was I did a whole financial plan delivery, and then I did a part 2 with estate planning and tax planning. And then guess what happened? There's way more to talk about than I can talk about in one meeting. So now we separate out tax and estate. So in our process, we onboard a client, we bring them on, we bring on their investments, we build their financial plan. So we do a goals and values meeting with them, we record all their preferences, we gather all of their data, we build their financial plan, we give the initial financial planning recommendations in the delivery of the tool that we provide for financial planning. And then we do choose your own adventure. So in Choose Your Own Adventure, we ask them at the end of plan delivery, what feels most important to you? So if you maybe don't have estate planning documents and we need to kind of get those put together for you or with you, that might be what they choose. A lot of people choose tax planning. So especially if they've had a surprise of a $20,000 tax bill just this past April, maybe that's something they want to look at first. Especially this time of year, we're doing a lot of tax planning. Next is that thematic meeting for them. Sometimes if they have other big concerns, so debt reduction or education planning or looking at all of their insurances, they might choose that instead. But tax planning is one of those meetings that we will then decide where that comes into the sequence together with the client. So depending on what their needs are and what their preferences are and where they are in life. So some people need a lot heavier planning than others. But once they're an ongoing client, what we do is we tag each client in our CRM system for different strategies. So the strategies could be, we have clients who do annual Roth conversions or annual QCDs, or maybe have some lumpy income or RSUs or things like that, where we need to say, hey, let's look at where you are kind of from a withholding perspective, what we need to do for withholding through the end of the year, so we don't have a surprise on April 15th. So maybe it's just kind of a check-in and see where we're at. Or maybe we're getting closer to age 65 or in past age 65, and we want to look at, can we maybe top up some brackets to avoid some future Medicare costs or future taxes? So those are some different things that we decide as clients come in, what their potential needs are. A lot of clients then get a tax planning meeting each year in this timeframe, September, October timeframe. So we are typically asking them for a copy of their tax return and a copy of their year-to-date kind of income statements and withholding and anything they know about or plan through the end of the year. So we have a format to kind of collect that data from them. And then we can just run out a scenario analysis for them. For some clients, we just give them a video back. And other clients, maybe we need to think through or talk through some bigger things. Yesterday, I did a meeting with a client where I recommended $110,000 Roth conversion. So I wanted to kind of bring them on and show them the scenario analysis and talk to them about why we want to do that. So what's the impact in the long run on doing this Roth conversion now, to kind of get them up to that first Medicare bracket, the $206,000 joint Medicare bracket. We wanted to kind of keep them under it. We wanted to top them up to get to the top of that bracket. So that's something where there are clients where we need to kind of sit down and go through it together in a meeting. And there are others where we can just kind of give them a recommendation. Hey, all of the withholdings look good for the end of the year. If there's no surprises, this is kind of what we might expect. And we also then start to build their tax letter. So we start to stage that out around this time of year so that we can start to communicate to the CPA kind of as we're doing some of these strategies with the clients that we're potentially putting it down in a tax letter with them. So getting that ready to go for the spring. So typically most of our tax planning is done in the fall, but we do, of course, help people with some of the big decisions that they might need to make kind of up to April 15th if they're deciding how to contribute to IRAs or if they should top up their HSA contribution or anything like that they might potentially want to do. So I had another question about if I've had situations where using QCDs along with DAF contributions. Yes. So the client that I just mentioned that's in their late 70s, there's two reasons for that. One, they're doing QCDs, but also they've got a lot of appreciated stock. So part of it is using a DAF as a conduit for that. So being able to contribute some of this appreciated stock and then gift that amount out. There's kind of some review that we did along the lines of how and from where do we want to potentially do our giving? And for them, we also did a little bit of bunching. So there's a little bit of advantage. I think we saved them about $3,000 in taxes by doing some bunching, by contributing to the DAF. But kind of the bigger aspect of it, or the bigger tool, was giving some of that appreciated stock that has just been baking in their accounts for a long period of time. So there's a little bit of strategy in that too that we evaluated and just talked through. So there are tax planning preferences that clients have. Some clients don't want to give from their IRA, or they're maybe using that for income, and that's kind of a controlled income amount throughout the year. Or they want to give from this appreciated stock account. But what this client was doing was neither of those two things. They're just giving cash every year. So that's something that we can educate them on what both those options look like and what might make the most sense for them. Okay. Question on what does bunch or deductions mean? Yes. Taking the standard deduction instead of itemizing. Yeah, that's something that we potentially evaluate for clients. I had a pro bono client earlier this year. He lost his wife suddenly. He's 37 years old, 2 young children, and his wife died. And she was a teacher at a school, and they'd raised a bunch of money through GoFundMe to help create a scholarship fund through the school, through this private school that she worked for. And so one of the questions that he had asked me was, hey, I've got all this money that kind of came in. I don't need it per se. We've got life insurance money and other money. I don't really feel comfortable kind of keeping this GoFundMe money that we received. I want to give it back to the school, but how might I do that? And so his plan was to give some of it this year, some of it next year, and spread it out. But I was able to show him in the scenario analysis, I ran that for him and with him, and said, instead of giving it in 2 separate years, that if you take an itemized deduction and give all of it this year and don't provide a donation next year at all, you're going to get that full standard deduction, and you're going to get the full benefit of the itemized deduction. So that saved, he had an additional $13,000 in deductions by doing it that way, because he wasn't going to be able to itemize otherwise without that contribution. So that's something that we evaluate. It doesn't make sense for everybody. Very often for bunching, it's going to be somebody who is more charitably inclined. So that's going to be kind of a bigger reason that you potentially do that. Or if you have kind of bigger income years, a big bonus or stock grant or whatever it might be, stock vesting. Those are reasons to do it. Based on kind of the $10,000 limitation of the state and local tax SALT, usually it doesn't always kind of help if it's just property taxes or something you're trying to bunch, but there's sometimes a little bit of edge you can do that with. I ran a scenario with somebody earlier this year where paying their property taxes that are due in January, we just looked at, hey, if in every other year you pay it in January and then pay it early in December for your January bill, and then skip a year of paying it because you already paid it in December, and then pay it again. We were able to save them $1,000 in taxes over 2 years. So tax planning can be a game of inches. If you do that over a long period of time with a few other strategies, that can potentially be helpful to them. And just kind of slowing down and demonstrating to them that you do provide this valuable service, and you think about things maybe a little bit differently than maybe they've ever done themselves on TurboTax or with a CPA. And this is a level of planning that we can potentially provide. So how long is introductory calls with prospect? So we do an intro call, it's 45 minutes, and then we do a discovery call, which is an hour, and then they decide from there whether or not they want to hire us. So we do have time, we give ourselves time between those two meetings to potentially do some demos. And I kind of have them ready to go for either one. Usually in the discovery call is when we do the demos to kind of say, okay, introductory call is to say, are you a fit, and are our skills a match for your goals? So are we a good fit for you? Are we a good fit together? Sometimes the questions kind of go fast and we can go into a demo right away. But most of the time, we're going to be doing these demos in a discovery call. So in that second call with them, what I tell them in the intro is, hey, I really like you. This sounds like a great fit. Let's get on another call where I can kind of demonstrate for you or show you what a financial plan is. So what are you potentially getting by hiring us? And what do you have both in the tools and resources, but as in a thought partner as well. So I typically explain that we have this amazing technology that we use, and you get me. So we get to talk through and think through, and I'll continue to educate you through all of these different decisions that you have in your life related to your taxes or other areas as well. Okay. When do you ask, this is the last one I'll ask right now is, when do you ask a client for tax returns, and in which meeting do you do that? We don't do that until we onboard them. So I don't give away any actual planning for free, really, not any deep planning. So I'm not going to ask for a tax return and analyze that in an intro discovery call. We also don't ask for investment statements. We don't ask for any financial planning data. I do demonstrate through kind of sample plans what we do, but we don't give it away for free. So once they come on, then we collect their data and we supply them with the goods. But that's kind of a personal choice that we've made, and that works out really well for us. So they can kind of see what kind of value they're going to get by hiring us, and that helps as well. All right, so I'll go in and hit a few more questions in a moment, but I want to kind of take you through a little bit more here. So some of the goals that we love to communicate. So in those intro and discovery calls, we talk about tax planning. I already talked about no surprises, April 15th. We want to reduce your total lifetime taxes. I still haven't come up with, if anybody can message me on LinkedIn or email me and tell me a better way to say it. Kendra Wright, marketing guru, got on the stage at Shift and specifically called me out for saying lifetime total taxes, because that's not how clients speak. That's not client-friendly language. I still can't figure out a better way to say it. So I'm kind of stuck with that term. But that's something we do, is we zoom out and look at the big picture. So we zoom out and show them their tax plan, and then we zoom into each year and say, what can we do to maybe optimize each year? So we explain that to clients that we do that work. We love to help clients reduce their consulting costs with their CPA. So for a lot of the CPAs we work with, everyone, you're all dealing with this right now, is there's a lack of CPAs. And when you finally do get somebody who's willing to take you on and prepare your taxes, there's just not a lot of that room for that proactive planning. Their margins are super thin, their time is really limited. And so that's something that, one, they're kind of not always getting unless they know to reach out to the CPA in the fall and ask for that meeting and pay for it. So a lot of CPAs charge hundreds of dollars an hour to do tax planning. So what we love to do for our clients is potentially run a scenario analysis in Holistiplan, take a look at their data, plug it all in. I like to do it with the client too. I like to walk through their data together with them in the scenario analysis. And then I ship that off to the CPA and say, hey, for this client, we took a look at their income this year, their potential deductions. We took a look at their withholding throughout the year. I think they're going to owe $8,700. Can you advise whether or not they should make any estimated payments before the end of the year? Or is this withholding amount sound okay? So some of those things, once we kind of package it up and get it over to them to review and bless, then a lot of the time the CPA doesn't end up billing them for that time. So we're saving them some costs potentially there, saving the CPA some time. And we're all intimately familiar with their data and their preferences. So we're sometimes in the best seat to be able to kind of do the first look or first run of that information. So want to help them make tax decisions. So some people think that taxes are just something that happened to you and you're just kind of a bystander or victim of it. But there are proactive strategies that not a lot of people are aware of or familiar with. So sometimes it's some of that show your value is potentially saying, hey, right now you're 43 and 45 years old, but when you want to retire comfortably in your 50s and you've got this like dip and valley, there are some strategies that we're going to potentially talk about, and I'm really excited to do that with you. So I like to be able to show them, what do we do? What do we think about? Or, hey, you're currently making pre-tax contributions into your 401k. Just want you to know, we took a look at that for you. We evaluated whether you should make Roth contributions instead. We evaluated whether you should bunch your deductions or not. There wasn't really an opportunity. So based on your total state and local tax deductions and your giving, how you're currently doing your giving, all of that looks good. So sometimes it's just telling them, hey, we looked at this, we did the work, let's show that work. We looked at your return, we evaluated your return from last year. So showing that work by showing them a tax report is another thing that we do to just show them we're taking an extra step with them on that tax plan. So, and that tax report is something that somebody on my team runs for me, and I go into the meeting and I pull it up, I walk them through the tax report. I'm going to show you how I do it. And it allows them to just see that we are evaluating that differently. We're different. That's what we want to demonstrate. And it's a game of inches. So some of the different techniques, different things that we potentially look at are listed here. Those are all things that there are also some fantastic webinars for Holistiplan. That's one thing that I really appreciate. There's a couple things I really appreciate in tech that we work with. One is the tech potentially growing and changing and shifting? Every time I log into Holistiplan, there's some kind of additional tool or feature, or it just looks just a little bit better. I just feel like they're constantly working all day and night to make these tools better. Even in preparation for this presentation, Laura showed me the new tax report 2.0. So if you haven't kind of activated that yet, that's something that I kind of just learned about and started to use just this past week. So there are new tools all the time and potential to provide suggestions, but also really good presentations. So bringing on either advisors like myself, or Debbie Taylor does a whole masterclass that's fantastic. That will take you from, if you feel like how I did before, which is just scared about tax planning, or I'm going to make a mistake, or I'm going to talk about things I shouldn't, or this is an area I'm really confident in, you can get there really fast with those different tools and webinars and things that are offered. So that's one of the reasons why I really enjoy having Holistiplan as a partner, that it allows me to kind of do my work better, faster, provide really good reports, and just learn along the way. So I appreciate all of that. Okay, so when I onboard a client, so that's one of the questions that somebody had asked, which I'm getting to here, which is just kind of recording and documenting their preferences, their history, how are they currently doing everything now, their sensitivity. So as we're trading, are they really sensitive to capital gains inside of their accounts, or are they not? Can we come up with a tax budget so there's no surprises? That was another reason that a client came to me this year, was their advisor did a lot of trading last year and generated $80,000 in long-term capital gains with absolutely no notice to the client. So there's no communication, no preferences gathered. So things like that are just things that we can do a little bit better with. I like to educate my clients. So a lot of my clients are female-led households. So women sometimes either lead or a big role in the relationship. Not always the case. But what women like, what female investors really like, is education. So meeting people where they're at, helping them without any kind of judgment, just kind of understand a little bit better what their current tax scenario is, or what their current financial plan looks like, and what are all the possible avenues that we can potentially go down. So potentially walking them through some of those reports, reviewing just different account types and tax status. don't assume that your client knows what a pre-tax or Roth account is, or how a taxable account is taxed. So what are capital gains? What are short and long-term capital gains? What happens with that account over time, and when might you use those distributions? Looking for some different opportunities and tagging those. I talk a lot more about the tasks and the tags and the workflows and the processes, everything that makes this happen. I talked about that in the previous presentation. Okay, I'm going to answer a couple more questions, and then I want to actually show you how I potentially walk a client through some of the different types of reports that we run. So I'm going to answer a few questions first, and then I'm going to jump right into those different tools. So how am I prompting for referrals? That's a great question. So we actually have clients come to us from a bunch of different avenues. We have clients that come to us through social media. So 18% of our clients this year have come in through LinkedIn. We have a lot of clients that come in through different SEO efforts. So blogs that we're writing on our website or things that we're trying to kind of score for. So if clients are looking for potentially for tax planning, then that's something where there's an avenue that might help direct clients into our website. So building out some of those title tags and blog posts and client scenarios and stories, and repurposing some of the LinkedIn content into a newsletter, into our website, helps with kind of some of that channel of clients that come in. And then just continuing to do good work for our existing clients brings in referrals. So like many of your practices, about 30% of our clients come in through referrals from existing clients because they're happy and pleased with what we do for them. We don't ask for that specifically. So if you're asking what we're prompting for referrals, we don't potentially ask for those, but we are blessed with different people who come in our door that way. Question, do you coordinate with the tax preparer before actually executing on your recommendations? Sometimes, yes. So if we have questions, usually we're just informing them. So we use the tax letter to kind of let them know what we've done or what we're currently doing, or we communicate with them kind of during the year. Usually I'll send an email, especially if it's something like a Roth conversion that might create some taxes. Then we'll potentially communicate, hey, we're converting $40,000 from their IRA to their Roth. Can you kind of take a look at the scenario and recommend if they should make any estimated quarterlies? Those are things that we just like to keep communication, but I don't usually ask them for permission. So usually if we have a good grasp of the scenario and we've plugged all of their data in, then we usually kind of know what to expect. Somebody asked if we can share the discovery questions. Yes, we're going to share the materials, slides, everything. If there's anything specifically that you want to ask more about, as Laura mentioned, I'll spend some time after this presentation for questions that I didn't get to. Then I can answer those. So if you have any specific questions about how I potentially address something with a prospective client or a current client, how we talk about planning, how we show planning, those are all things I'm happy to answer on as well. Okay, I'm going to take you into Holistiplan tool. Okay, so I have my demo client. So I'm logged into Holistiplan now. So for each household that we have kind of a little dashboard for each of them. So really quick demographic information as well. But for this potential demo person, we uploaded their tax return. So really simple, just take their tax return and upload it in. Or there's an integration with tax status as well, where you can feed that over from tax status. But ultimately, most of our clients, as part of our onboarding process, supply us with their most recent tax return. We ask for the last two so we can understand any changes or differences or opportunities potentially. We're being really careful in our language, not to say that we are checking their tax return for errors or validating any data. There's nothing that we're doing that might look like tax advice. But what we typically tell them is we'd like to take a look at your tax return to incorporate this information into our planning process. So basically just taking information, incorporating it, and that allows us to kind of stay on the line of tax planning. So one of the things that we walk through with every single client is their tax report. So tax report is just really clean and beautiful way of showing them their tax return without this like mind-numbing 1040 kind of boxes. I think people go cross-eyed typically when they look at their tax return and they just don't understand it. So their tax report, one thing I like and why I use this tool more is that I can download this PDF and just save it into their vault in our financial planning software. So we use Right Capital. I've used the other ones. They're all great. They all allow you to have a vault with folders. So we have a folder that says tax planning, and then we have subfolders by year. And each year we run this tax report for our clients to be able to just pull up really quickly and get fast stats. So we can take a look at what their total income was, their AGI, what deductions they had, total tax that was owed for the year. We can also very quickly understand what bracket they're in, so both their marginal bracket, but their average rate. So get a good understanding of that. We immediately pull this up to understand, do they have any carry forward losses? So we communicate that. I communicate that to the 2 folks on my team that handle trading. So we immediately know that. Did they have a lot of capital gains last year? So what do their dividends look like? What kind of credits do they have? So we walk them through and help them understand that. So what's the breakdown of their income? So we review that. But I actually love to spend time here. Do you know how many people are just confused about how these marginal tax brackets work? All of us have probably gotten that question at some point in our careers about, oh, I don't want to get a raise because if I'm a dollar over, now all of my income is going to be taxed at 24%. And we all know that that's not true, right? So we get to show them and demonstrate, yep, everybody in this country pays the same 10% in this kind of scenario on the first $22,000 that they make. That's the tax owed on that income. We talk about kind of how these different thresholds work, where they are in the threshold. So where does their income fall, their total income fall inside this bracket? And then that's where, especially if they're getting closer to those Medicare ages, potentially talking about topping those up. So we talk about topping up those brackets. We also look for loss harvesting situations throughout the year, but also gain harvesting situations. So every once in a while, we get a little surprise that somebody might be in a low bracket situation where they might have some room for us to sell some appreciated stock or get them out of certain positions because they fall below the taxable income threshold for long-term capital gains. So they might not owe any tax on that. So those are really neat nuggets to look for. And in the checklists and processes, this is something that we look for with our clients. So we help them understand how the capital gains brackets work, but also how they stack with the ordinary income brackets. This, of course, anybody who's getting closer to Medicare age, we spend some time on, because if you can save a couple $70 a month each, so $140 a month each, every single month for an entire year, that is very worthwhile. I don't think people talk about this enough. So I consider some of the Medicare premium bracketing to be part of tax planning. So this is where we cover that too. So same thing for clients who are maybe in that early retirement phase. So some of my tech professional clients that want to retire at 50 and say, hey, my insurance is going to be astronomical. We can talk about maybe where to keep their income. So the where to keep your income is a tax planning question. So where are we pulling distributions from? That was one of the questions that came up in the chat is, potentially, how do you explain that to clients about where you can pull additional income from? So it's where you're going to be taking those distributions from. Are you taking it from taxable accounts or qualified accounts or Roth? Where you're taking your distributions from? Can you control your income if you're doing some consulting? So how does that potentially look, and how does that impact your cost for healthcare or later on Medicare? And how does that kind of quantify over time? So those are things that we like to demonstrate. And I like to educate clients on this too. I had a LinkedIn post a few weeks ago about how I talked to a 34-year-old about Medicare brackets, because we were talking about contributing Roth or pre-tax. And I said, this is going to be a big deal and a big cost to you later. So we can save you thousands and thousands and thousands of dollars in Medicare premiums in the future. I think it was $213,000 in future Medicare premiums by just changing how he was making contributions into his retirement plans. So those are things that we pay attention to. I love that this report just has this right on it and allows us to just quickly educate them. Everyone can kind of connect to that dollar amount a little bit better. This also allows us to kind of see what's on their schedule. So in this particular scenario, I could look at that and say, oh, they actually make charitable contributions each year. Should we look at plugging their information into the scenario analysis and looking at bunching that a little bit. Does it make sense to maybe use a donor advised fund? So this already kind of tells me whether I should bring it up, because you don't talk about charitable contributions with everybody, right? So if somebody's not charitably inclined, or that's just not priority for them right now, we're not going to talk about making big contributions to charity or opening up a DAF, right? So this allows me to kind of see already if they are charitably inclined and whether or not there are some opportunities there. And then there's some gold in here too. So just from the Schedule B, we can see, oh, they have some dividends coming in from Vanguard. That's not where we hold your assets. You have other accounts. So sometimes potentially looking at other income sources, interest, dividends, kind of verify which accounts they've already told you about or that you potentially work on. You get a little information about that as well. So there's some additional new pieces in there. So as I mentioned, what I like about Listaplan is there's new tools, new features, new easy charts and ways to explain things that we've seen kind of grow over time. So looking at tax efficiency. So this is kind of new to me, at least, being able to look at taxable versus tax exempt interest. So are they in a state with high state income taxes? And have they not maybe evaluated putting their using municipal bond funds, especially state-specific municipal bond funds? So is there an opportunity potentially to look at that tax equivalent yield between maybe some kind of corporate or federal level kind of bonds and looking at some of the municipal bonds, state level? So are there opportunities there? We can educate clients on some of the short-term gains. So potentially teaching them about that 1 year waiting period to get to the long-term status. Maybe they don't know that. So maybe they've sold some stock from their vested RSU pool of what they have, and maybe they didn't kind of look back for a year or understand how that all worked. So other income sources, so we can see, okay, do they have maybe a small business or some consulting income, anything like that that we didn't know about? And then what types of credits or deductions are they potentially eligible for? So this is part of educating your client and showing your work to say, hey, maybe you're over the line here, but we looked. So we did the work. We looked at this to see what you're potentially eligible for. So we can then very clearly see the deductions and credits that they're currently taking. So those are all things that we can then very quickly find out on the tax report. I do occasionally use the explainer as well. I like the report a little bit better because I can PDF this over to our other planning software. But Tax Explainer is for somebody who is especially new to tax planning. It's a really nice way to just walk them through their return. So if they don't understand where did this information come from and where is it found, sometimes people enjoy that. So maybe they like to get into the numbers and the weeds and find out, well, how much of my income was wages versus capital gains? What did my total tax look like and where did it come from? So how much of my taxes were kind of generated from income versus gains or other types of taxes that I pay. So there's some different tools in here in the Tax Explainer. I do walk clients through that as well. The last thing I want to show you is, or the second to last thing, scenario analysis. So this is where in the scenario, if I've seen something like they make charitable contributions each year. So they're right now, this Peter and Paula professor are donating $10,000 per year. So looking at some of the efficiency options for how to potentially maybe bunch that differently or look at things a little bit differently. What's nice is you can just import, once you've imported their tax return, and I've uploaded the 2023 tax return, it will automatically take the entire tax return and plug it in and extract all of the data. So before I even get started, I already know exactly what their 2023 tax return looked like, and all of these lines are already filled out. So I don't have to go in and put a whole bunch of manual entry in here, but then I can copy this scenario and make a 2024 projection and say, okay, now it's not 2023, it's 2024. Are there any other changes? So are there changes to their marital status or dependents? We can go in and update that. Are there changes to their income? So in this case, maybe they got a big raise, or maybe one of the spouses went back to work. So now they need to evaluate, what does our tax scenario look like now? So now I make more money. What's next? A lot of our clients have, hey, now I've started to work for this company that's offering these RSUs, so this additional income. Now, what does my tax scenario look like? So we use this as an educational tool, but also a projection tool to just kind of look forward and look at different opportunities. So when we go down in here into the different deductions, so itemized deductions here, this is where you can work together to play around with property taxes. So does it make sense to potentially bunch property taxes? So you can plug in these future years and say, no taxes 1 year, or you're paying 2 years worth in 1 year. And same thing with charitable contributions. So this is an area that we, when we're looking at deduction bunching specifically, we're going to look at, well, if you're going to give $20,000 a year because you've got this big raise and you want to be more charitably inclined, does it make sense to give 20 and 20 and 20? How does that look? So what are your potential projected taxes for those 3 years? Versus what if we made a contribution of $60,000 into a donor advised fund or just gave it outright? And when you go into that charity worksheet, there's an additional DAF explainer that's really cool. So you can kind of walk them through that process. A lot of clients that kind of create a donor advised fund for the first time need a little bit additional education on that. So there's a great educational tool in here as well that opens up. But we can kind of plug and play and kind of think about it. So what happens if we spread it out? What happens if we bunch it? Are there other things we can bunch? So sometimes some medical expenses can be potentially reviewed. And then we go down here and just look at the difference. So this is the taxes owed each year, and it's just kind of adding it up. So what are their total taxes over in this situation over 3 years in the different types of scenarios, and what is more ideal to potentially use from a bunching strategy? So this is something that we go into live with our clients in a meeting, so that we can also kind of double check the data to say, hey, this is what I have for your interest and dividends. What do you think about that? Or I see you took an IRA distribution in 2023, and maybe you're going to take another one this year. Do you think you'll keep taking IRA distributions? So it allows us to kind of walk through the data together a little bit and just kind of plug and play and see what it all looks like together. So this is a tool that I like to use live with them. And in that tax planning meeting as well, typically, we also together work on their tax letter. So sometimes we don't know everything about what's going on in their lives. So different income sources or interest or dividends, maybe they opened a new bank account. You'd love to think that maybe clients tell you everything all the time, but they don't. So this is a way to also kind of check information. So we work on their tax letter together. This is a tool that is really, really cool that allows you to just generate a tax letter for the CPA each year. So you can go in and say, okay, where did you potentially have different income, or did you make any tuition payments this year to a qualified institution? Did you take any distributions out of your IRA? Then we grab whatever type of form that might be coming in. So distributions from an HSA, for example, and say, yep, we're expecting one from Optum Bank. And then that gets added over here. So we get to see a preview of all of the different types of tax forms that we'll work on together to kind of show their CPA what to expect. So it tells the client, what should you expect to get in the mail or electronically? So what's kind of a little checklist of the different tax forms that you might have, 1099s or W-2s, what might be coming in? What's some additional information that you might want to share with your CPA about maybe cost basis on some computer share stock that you sold? And there's other types of strategies you can plug in too. So if you make 529 plan contributions, if you live in a state that has a deduction and you want to tell them about it, you can go in here and then kind of add in the date and the description for the CPA. It'll give some additional information. It'll generate that right onto your letter. Potentially being able to talk about HSA contributions, that immediately populates right onto your letter. So it creates this template for you. And once you've done this in 1 year, you can copy this over into the next year. So if they haven't had any changes to their employment or where all of their different 1099s come from, they might have very few changes. Same company holding their mortgage, same charitable contributions. So this becomes really easy when you repeat it each year. So you just basically stage out your next tax letter. You check in with the client to see, is there anything maybe we don't know about that you want to add? And then we're also jotting that down for their plan and just kind of seeing what all of that looks like. So that's kind of what we do to kind of show our work and demonstrate that value of planning and quantify for them, okay, if you do this deduction bunching or you make these Roth contributions or conversion, what is kind of the value in the long run, but then how do we look at it kind of on a year by year basis and some of the different tools to help provide some additional value. So thank you for joining. We have a lot of questions in the chat I didn't get to that I will respond to and get an email out. So look out for that email with just some of the responses to some of the questions that we didn't address today.
Thank you, Emily. That was outstanding. There are so many nuggets in there, both from practice management to tax planning. And I think the crowd went wild over the sneak peek of the tax report 2.0 beta. That was pretty exciting to see. So as a recap, if you are not yet using Holistiplan, you could sign up for a free trial. We have a free 7-day trial. If you're interested in that, highly recommend that. Or if you wanted to schedule a demo with our team, we have a whole team of AEs ready to go. You can schedule that right on our website. If you're an existing client and you wanted to turn on Tax Report 2.0, you do that in your settings. In your security settings, you can click in settings, security settings, and you flip on the preference to Tax Report 2.0, and that will turn it on for your whole firm. So if you're not the firm admin, you just need the firm admin to do it. But yeah, from there, happy tax planning, everybody. Thank you for coming. We will send out, Holistiplan will send out a recap email with the slides, the recording, the Q&A, how to turn on Tax Report 2.0. And yeah, we'll go from there. Thank you, everybody, so much for your time today. Thank you, Emily. Amazing as always. And we'll see you soon.